From the faster 1,000 tick perspective, obviously starting off the day, we started off with an attempted bear drop to the downside, but that didn't work. Tried getting the bulls going, but that didn't work. Tried getting the bears going after that. Finally, they got a break in a couple legs. Hey, howdy. We finally got it done. As far as the bull rotation to the upside after that, the bull cycle seems to have gained a little bit of momentum. Sticking at the highs, sellers maybe even trying to get going, and then getting absolutely stuffed. So if the sellers have been stuffed, they're probably mounted and hanging on a wall at this point. But if they're not, let's see where their stops are. See where their break evens are at. Whew, that didn't feel good. 13,727 is where their break evens are, at least down here. If we continue that a little bit further towards the next lower high to see if anything changed, it didn't. How about the next lower high? It did not, but we've got a lot of volume up there. Did they shift it here? Yep. There's the POC shift. So on this high, that's where they shifted the POC. Let's go to the next one. Excuse me, and see if they have another one, which they do. And they have another POC shift on that one. So as far as the overall momentum, what have they likely done? Now look at the overall volume. Draw a line up vertically from this volume and realize that there's two POCs here. It looks like they doubled down, right? I mean, pretty straightforward stuff, right? So 13,727.25 plus 13,910.5 plus 13,920 divided by 3. It's 13,852.5. They're short, round down. 13,852.5. That is where they would love to GTFO out of their shorts that they've been wrong all morning. If we combine that with algos looking for a long move to the upside, the longs begin kicking in at 49. Down to 831. So, I mean, you want to talk about a hot spot zone of interest, it's right there. Big zone for the bulls. All right, well, it looks like the bulls are trying to take it ahead of getting any kind of dip down. Another lower high. Now, for sure, a ton of bulls will have bought into that bull bar back to the upside. They didn't get down to the area that I'm interested in, but the masochistic part of my brain is wondering how many bulls are in this move with stops just underneath this last low that was made that Goldman and JP can utilize as a liquidity sinkhole to dump all of their buying volume into the support while everybody else gets stopped out. Starting to look a little bit more like a realistic thing. Ooh, okay. Getting a bit spicy. Now, if the bulls do take it back up again, then we're very likely not going to be getting that dip down into the 850s, and we're probably going through the highs. So if the bulls start piercing back above like the, what is that, 40s, 45s, mid 30s, upper 40s. I'm going to throw one on at this low with the assumption that if the market is going to use this as a jerk back to the upside, then we'll probably be able to utilize that last low as a scalp zone for targets up into like the 91s. I could see something like that. Okay, yeah. I mean, here's the thing, right? That was a really nice long. I'm kind of wishing I took more than one contract now, but with this kind of rotation, we've got to look at what they're doing. This is exactly what we were talking about. It's a liquidity sinkhole. JP and Goldman knows where is everybody's stop going to be. I wonder, maybe just maybe underneath the most obvious swing low that's been plotted since the beginning of the day. Humans are pretty predictable sometimes. So they all put their stops underneath there, when in reality, that is not the correct stop placement. The correct stop placement on something like this, given the fact that the most recent confirmed swing is here, that's where the stop is. Well, JP knows that, and they can also afford that. And they also know that you probably can't, right? So what do? They target your stops. They eat them up like they're going out of style. Tasty. They haven't hit the major zone yet, though. They're just playing games. What they're doing right now is adding more tension to the spring. The spring is coiling up. Obviously, they're buying the lows. We can see that happening. But the more they buy the lows and the more sellers get stuck, which so far the sellers haven't really been stuck that badly. The sellers will start exiting. The buyers will start seeing that weakness and buy more. And then we start seeing higher lows. And then we start getting that shift. We don't necessarily have weakness from the bears yet.